Welcome back to Hitting Home with Mike and Arif, and we're talking about market preparedness, preparing for changes in the market. One of the things I touched on was that reserve that you have set aside that allows you to act as a buyer/investor. So let's elaborate on that a little bit.
Sure. I mean, I think that's a great segue, and it's a great question. It certainly is a lead up. One of the things that I think, perhaps from the perspective of our audience, and I always want to be mindful of that, is, well, isn't that nice and convenient that you've set aside a reserve? I mean, I have enough challenge as it is having enough money to last me the month, right?
Yeah.
So how do I put aside that reserve? And for me, I think it's important to draw analogies. I think it's important to look at other stories as an example. And if you look at any of the whether they're from the 1970s or even in the 2000s, the Karate Kid or the movies that have karate and performance in them, the Bruce Lees of the world, etc.
Wax on, wax off.
Wax on, wax off. I think if you look at it, nobody entered life into the ring, into the battle as a black belt. Nobody entered life with that chop or that uppercut or whatever, that kick, that roundhouse. It has always been about the fundamentals, and there's nothing glamorous about the fundamentals. You mentioned Warren Buffett before the break, and he's probably one of the least glamorous people in the world. I think probably Bill Gates is probably one of the least glamorous people in the world as well.
He's pretty conservative. Still lives in the same house he's lived in since the 50s that he paid $200-something thousand for, which is an exorbitant amount in the 50s.
And that fellow Ingvar Kamprad, or whatever his name was, who founded IKEA, I mean, he drove a 1970s Volvo until just recently in the last 5 to 7 years. You probably did. But I think the thing is that for people who are looking at this as a solution, how do I take advantage of an opportunity? Or how do I land the big one? How can I be in the right place at the right time? It's not about at that right time being in the right place. It's about all the preparation that you did before it. So let's talk about putting that nest egg or that
that nest egg or reserve isn't always going to be the gold coins nailed to the back of the headboard or money you've just got lying aside. It could be equity in an existing home that you own. And as you say, you don't start at the top, and often that first purchase is the hardest, and it's that step-up home you bought into. Now you're in the market. And each successive purchase is going to be a little bit easier, and it's easier because partly you've got a bit of experience you've gained from the previous experiences, but it's also you're starting to build equity. So the timing may be about foreseeing it. Some of it is a little bit of risk, but it's knowing what to look for and knowing when to liquidate on a property, perhaps. Then just holding out until that change and then buying in.
So let's get into some of what you just said, though.
Yeah.
And I think that is a question. I mean, liquidating a property could mean selling it, or drawing liquid from the property could be drawing equity from the property. But I think first and foremost, I mean, again, we have to be mindful of our audience. We're not providing financial advice here. We're talking about what people have done in order to make it. What are some of the sort of the age-old practices that have been done? And if you look at history, for example, and you wonder, well, we live in Barrie and Simcoe County and surrounding area, and you see subdivisions popping up all over the place over the last 20 years, et cetera, and we're certainly due for more growth. Well, what were those farmers' fields? What was happening with them for the last 20, 30 years, right?
Investors were sitting on a lot of them.
Somebody put their mind and said, one day this will be a subdivision, or one day this will be a development of some sort, right? And for years it was just a farmer's field and nothing else. And they were paying taxes on it, and they were going to their job and working and paying the bills. So the question is, for each person is obviously, well, what's the rest of your life looking like? What are you doing from 9 to 5? What are your habits from 9 to 5? And how much cash flow do you have? Forget about the investment that you want to look at. Forget about what we're talking about right now is, how's the rest of your life going, right? Because for each person, some people might have the good fortune of having ready cash flow. Other people might be just making it. And so therefore, we do have to look at those fundamentals of, am I making a coffee purchase on my way to work every single day, and does it add up? How many packs of cigarettes do I smoke in a week, or do I not smoke in a week? And this is not me telling people what to do to better their life. This is there an opportunity for me to prioritize what I'm currently doing versus what I could be doing?
And bringing it back down to the average person and mindful of, this is about preparing for change. One of the things for the average person, you're in your home, you've paid down a portion of your mortgage, you've been in there for 5 years, your home has increased in value, so you do have some equity in there, and you know it's there. Now, if the market's starting to go quiet and prices are going to dip for a while, it doesn't make sense to say, okay, I'm going to sell my house now and buy another house, because you're just trading one set of circumstances for a very similar one, because whatever's happening to the one house going on. But that's exactly the time you want to maybe draw some of that equity at the low interest rates we have now, and watch for some of those properties where some people are anxious to sell. Take advantage of those opportunities and buy in onto those properties. So you don't necessarily need that nest egg. As I said earlier, you have the nest egg built within the home you purchased a few years back.
So
I think,
this show was talking about cycles, Mike,
yeah.
and I think that that's really important, because we started off with talking about the media, and by the time the media is reporting the story, or by the time the real estate board is actually publishing numbers, you've already missed the cycle.
Well,
right?
It's already started.
Yeah,
so,
you got to be careful about that, right?
So preparing for that is coming in, talking to someone like you, talking to an investment counselor, mortgage broker, and knowing how much equity will I take? How's this going to impact me? What is that hit going to be, and how do I need to recover that? And that's going to determine the type of investment and the type of cash flow you're going to need from that investment on the other side of it, because you want to be cash flow positive in any transaction or investment you make.
Yeah, so I think we need to be very careful, because we're talking about a couple of things here. One, we're talking about the market and timing the market. And the bottom line is that if everybody's selling high, that's the wrong time for you and I to be buying, right? We don't want to be buying high.
And we've seen a lot of that.
So when somebody's selling high, they're cashing out, and maybe they're adding a little bit, an extra
Not
few
necessarily
percent.
the wrong time, but if they're selling high, but there's every indicator it's going to continue to go higher, then you're still getting it.
Right, but by the time everybody else is already doing it, the early bird has already got the worm. And so it's about watching and pacing, and what were the indicators leading up to it? Okay, so now let's talk about the other side. You talked about, if it's going soft, now is the time, maybe you don't want to be selling, but you're right, maybe it's an opportunity to take some equity and put that into your home, right? Maybe it's a time to take some equity and spruce up your home with the coat of paint, to do some landscaping,
to
et cetera,
build value in your existing
home.
But I'm talking as well about transferring some of that value into another project, into another property. And prices have continued to go up. They have leveled off. I think we're 1 or 2% national increase year over year, which is as low as it's been for a long time. Doesn't mean the market's crashed. It's just something different than the typical 5 to almost 20% increases we've seen year over year within the past 5 years.
Well, you talked about stimulus, Mike, and you talked at the very top of the show, you talked about being criticized for putting in stimulus, and that's exactly the right time to put stimulus in, is you don't want to be putting out stimulus as a government.
To be clear, our government put stimulus in.
When things are great. You want to have built the reserves so that when things do soften, you can market harder, you can stimulate the economy more. And it's kind of the same thing about what you're talking about, is you cannot just decide that I'm going to draw equity from my home. You've got to decide that, okay, I'm looking forward to maybe eventually drawing equity from my home. Let me make sure my ducks are in a row.
Hence the show we're doing here. It's about being prepared. So,
and with that, we got to go. We're going to come back after the break, and we're going to talk about some of the things that you can do in order to be prepared. And welcome back to Hitting Home with Mike and Arif. And in this episode, or in this show, we're talking about how to be prepared for changes in the market. And I think we need to get into some things that are really quite particular. First and foremost, Mike, we talked about this. We're 12 years into what traditionally would have been a 7-year cycle. And it doesn't mean that we haven't seen some ebbs and flows in the marketplace.
It should be seeing our second cycle.
We should be.
Then, we're coming up on year 14 almost.
So what does that tell you, though? The last couple of years, if nothing else, has been proof that the traditional patterns don't necessarily ring true.
They don't apply anymore. That doesn't mean they'll never apply again, but for the moment anyways, things government is doing, things that are just happening naturally. And I think another element to that is just demand has remained high. We every 4 years we have 1 million new Canadians coming into this country. And again, as I've said in previous shows, they're not people coming in with the shirts on their backs. Our immigrants are people coming here looking for opportunity. They're entrepreneurs, they're investors, many of them, and they're coming here and they want to buy homes. And then we also have seniors who are, transitioning in life, and we've got millennials, which is a bigger generation than the boomer generation was, are coming in, and many of them are doing things right, and they're looking to loan, and they're looking for different types of products. So there's all kinds of change, but it's activity within that market. And if we just want to look at what I've seen locally here within the last year, and I think analyzing the market is not a national thing. You can have national forecasts, which the media tends to go for, but between Edmonton, Calgary, Charlottetown, PEI, and Barrie, each one's going to have their own individual influences. We have that GTA influence where prices are ridiculously high, and people are continuing to spill over into our markets, and the demand has been there. And usually, winter is a lot quieter than it has been this winter for realtors, but there's been a lot of buyer activity, and there's been, in comparison, more limited supply of housing.
Okay, so I think, but what we need to realize is this, is that you're not an evil person if you take advantage of an opportunity. Taking advantage of a person is something that I don't think anybody should be too boastful of. But I think
the person who needs to sell that home, and if you're able to get it for a thing, you're doing them the favor of taking it off their hands too. You got to
absolutely.
Remind yourself.
Somebody's moving, somebody's got a job shift or a job change. You know what? I'm going to be blunt. Sometimes people do lose their jobs. Right?
Yeah.
Sometimes they do.
Well,
and
they
life
need
changes,
to get out. Whatever they may be.
Right. So an opportunity means there has to be an upside to you taking that risk. There has to be an upside to that investment. And so it is about being prepared for when opportunity comes our way. But we can look at our neighbors just slightly west of us. You look at what's going on in the oil patch and the oil fields. They're having a tough time right now. They're having a really tough time.
Some of the most expensive houses in the last 10 years have been in Fort McMurray. Some of the most affordable right now are in Fort McMurray.
Right. So the question is that
the economy's changed.
The economy's changed, and are we realizing that there are opportunities beyond our immediate neighborhood? Right? We're not just, yes, we are a local show to Simcoe County, but the opportunity doesn't necessarily mean that we're limited to looking at what's going on inside our city, our province, or, in general, right? So what are some of the things, Mike, that you as a realtor are looking at in the market to guide your clients who are looking for that opportunity?
Well, the key equation for our industry is supply and demand. So as supply goes up and we see the market saturated with homes, there's a lot more opportunity for a buyer because people become more anxious to sell and they're competing with far more people to sell. So that creates an opportunity for the buyer. Wouldn't say we're totally there right now because, again, we've got a lower level of inventory and we still see a lot of buyer activity. But that's the kind of market, as a buyer, as an investor, you want to look for. Is there a saturation of properties? And as you see those levels going up, prepare yourself. There may be opportunity coming.
So I'm going to jump in on the other side of that equation, and that is that this stress test and certainly the economic indicators have suggested that we are in a slightly tougher time. It keeps on jockeying back and forth for between Canada has outperformed to Canadians are struggling. And it really depends. Are you looking at the global scale, or are you looking at what's happening on our own in our own very neighborhoods? And so the fact of the matter is that the stress has been a challenge. We've known it. We've known it for a couple of years, and we've heard our policymakers and politicians, they've been sort of courting the idea of we need to reduce the tension, or we need to reduce the standards of the stress test. But what does that mean is, for somebody, there's been a breaking point. Somebody's had a really tough time qualifying for that, and they may be out of the market, right? And so is there an opportunity there? If the stress test does get relaxed, also, we're seeing that the interest rates are starting to come down again. Why would interest rates come down? They're coming down because those who are studying the trends and policies in general and how they correlate are deciding that, you know what, maybe we're pushing people a little bit too hard and they're not able to keep up. Well, so now is the time for when those rules do get relaxed, is our new entrants going to be able to get into the marketplace?
Well, here's what I think is different, and perhaps some of the numbers crunchers and soothsayers out there looking at the market didn't really see this or see the full impact of this, but I'm seeing it now, and I think everybody's starting to. That millennial generation that's buying, let's take it back when you and I were buying, we were completely on our own for the most part in saving that bit of money and then buying into our house. That's next to impossible for someone who's 3-4 years out of college, university, and still paying down school debt, everything else. However, one thing that wasn't really considered that I want to point out is their parents. our generation, many of them have a home that they've owned for many years. They've doubled and tripled the value of their home. They have that equity. They have their savings. They're in a far better position. And they're far more willing than our parents' generation was to lend us money towards that down payment, to get us into a home. And I would say the under 30 crowd, I don't know what the actual stat would be, but I'm sure it's more than half of them are not buying into that house without some help from their parents.
Well, I'm going to
so
close
that's
this
what's
out.
kept this market
I'm going
going.
to close this out with this. I'm going to disagree with you. I'm going to say that it doesn't matter where we are, whether it's which generation or which decade. Yes, there are some differences in habits, but here's the thing. We all, if we choose to, we're all on the same playing field.
Yeah.
But if we choose not to be on the same playing field, it's about what we do differently. And
Yeah.
so those of us who are going to prepare, those of us who are going to tighten it up a little bit, those of us who are going to back away from doing what everybody else is doing and saying, the herd's going that way, the opportunity's this way. And I think that's what the difference maker is going to be. And we do have to go. We're out of time on the show.
Okay.
But we hope you enjoyed it. Thanks for joining us on Hitting Home with Mike and Arif, and we'll see you next time.